Hello, Lakewood Ranch viewers. Well, in today's video, we have a special guest speaker, Chip Murphy from Michael Saunders Company. Now, Chip is head of business development, and he's going to cover 5 topics, which I think you might find interesting. First, what is going on in the real estate market as a country? And then how does that compare to the Bradenton and the Sarasota market? And what about interest rates? Are interest rates going to continue to climb? What's happening in the Airbnb market? Is it really going to bust? And are home prices declining? So we're going to cover those 5 topics. So stick around. I think you'll find this conversation very enlightening. Hello, it's MarkBoehmig, Michael Saunders Company. In this channel, Living in Lakewood Ranch, we cover all the areas around Lakewood Ranch, from Bradenton down to Sarasota and Siesta Key up to Anna Maria Island. So today, I want to introduce a special guest. We have with us Chip Murphy, and Chip is in charge of business development for Michael Saunders. Chip, welcome.
Hey, Mark, thanks for having me.
You bet. Thanks for taking time out of your day. And I'm sure things are busy down there in the Sarasota office, but if you could just give us an idea of what your background is and your affiliation with Michael Saunders Company, so we can tell the audience a little bit about you.
Yeah, absolutely. Thanks, Mark. As you had mentioned, I'm Vice President of Business Development here at the company. I've been a real estate broker for just a little over a decade. I started my real estate career in upstate New York, relocated down here to the beautiful Sunshine State just over a year ago. Was in sales for a few years, then in the leadership side, ran a company in upstate New York, residential brokerage, and now work down here with this great company and colleagues like you. So happy to chat today about the market and looking forward to a discussion.
Now, before we get into this, I know you have some connections. I was on the Manatee County Economic Development Council, and I think you have been ensconced into some of those things in the Sarasota County area. Before we get into it, can you just give us a little bit of information about what your connections are with Sarasota in general?
Yeah, absolutely. So I'm a resident here of downtown Sarasota. I'm on the board of the EDC of Sarasota County. Had done similar work in New York. So really important part for me is to be involved in the community, and that being a big reason why I'm here at the company as well is how dedicated Michael Saunders and Company is to the communities that we serve.
Great, great. Well, I know it always helps to have outside information coming in, things that are connected locally to the real estate industry, but not only real estate, but the things that are going on in our communities, what's coming down the pike, what kind of changes that we have. So it's good to have someone that has the well-rounded background that you do. So let's talk about a few of the things. Let's look at this. What is the real estate market doing nationally as well as locally here in our area?
Yeah, absolutely. Thanks, Mark. So what I want to start with is by saying that our real estate market is still very strong. There are a lot of opinions that are out there, a lot of media coverage on the real estate industry. And I think it's important to note as we talk through this today that every market across the country is unique. So it's really difficult to speak to a national narrative. As you know, we continue to be in an environment of incredibly low inventory. Well, we're seeing some buyers have taken a step back, whether that be because of economic uncertainty or rising interest rates, which we'll talk about in a little bit here. There's still so many who are serious about transacting. Historically, there's always been at least 4 million properties that have sold on an annual basis across the country. Mm-hmm. I think we're on pace this year to trade about 4.3 million, 4.25 in 2023. Now that's down significantly from the last couple of years. In 2021, there were just over 6 million homes sold. 2022, it was a hair over 5 million. This year is probably going to be similar to 2011, 2012 as far as number of homes sold. In the headlines, we hear sometimes about a housing crash. We hear about home prices declining. And so wanted to talk about what the real story here is. We know that growth rates of rent are shrinking. We know that home prices aren't appreciating at levels that they were the past couple of years, but they aren't depreciating either. And I think that's important, the difference between appreciation, depreciation, and deceleration. And that's what we're seeing today is properties here are still appreciating, but at a lower rate than in the past. That is different than the national narrative. And Mark, I included a graph which you can pull up right after home prices declining here on this next slide. And this is going to show trend lines from early 2019 or so of how properties have risen in value pretty significantly. And then you can see at the end of the fourth quarter, 2022 into 2023, there was a decline there. And again, that is nationally. So Mark, if we look locally here in Manatee County, average prices are up to about 765,000, that from 752,000 in 2022. And then in Sarasota County, that average sale price year to date is 845,000, and that being up from 842 in the same period of 2022. This graph that I have here on the screen combines those two counties, Sarasota and Manatee. And again, you can see the seasonality of prices had risen at the end of 2022. In the beginning of the year, which was always typical, you'd see prices go down, and that just as a result of properties that had come on the market, price point of those properties, and then it inches back up. So again, year over year, we're in a good position where properties are continuing to appreciate in our area. Again, that not necessarily being the story across the country. There are different areas where home prices are declining.
Well, I guess that's why they always say real estate is very local.
That's it.
And I know that I like your price deceleration because the national media likes to say that home prices are going down. Well, they might be going down, but not as fast as what they had previously gone up. So people are still in a plus gain for a majority of the market here in our area.
Absolutely. Yeah, we're in a great position here locally, and we'll talk about that in a few minutes here. Now, are there fewer homes for sale this year? Yes, we had talked about that. Is the overall volume down? Yes, because there are fewer homes, but there also continues to be fewer properties that are new to the market. So our days on market for Sarasota, Manatee counties are about 49. We were at a few days at the peak of the market back in 2021. Our inventory is 3 months, and that's shown on this graph here, which is still really low. A balanced market is somewhere around 5 months. And being that we're at that 3-month period, I think it's a mindset shift, Mark, that
I do too.
for such an extended period of those couple of years around the pandemic, we were used to our inventory being 2 weeks here in this area.
Right.
And so now that we're 3 months, it's quite the multiple of change. But historically, when you look, we're still in a really strong real estate market.
Yep, I agree.
And I think that, towards the end of the year, we'll see improvement in inflation numbers. It's predicted that rates will start to shift down, and that's what we're going to talk about next, probably in the first quarter of 2024. And so we have all these buyers who are waiting on the sidelines right now for rates to come down. Couple that with low inventory, and assuming that inventory will remain the same, I think, that will result in more buyers, which means higher demand, which means further price growth. So I think here especially, we're really in a good position. And before we go on to rates, I just wanted to talk a little bit about the economy of the state of Florida, Mark.
Okay.
So the economy of Florida, as we know, has grown significantly over the last few years. We're the equivalent of the 15th largest GDP. Florida has a goal to be the equivalent of the 10th largest GDP by 2030. That'd be the equivalent of the size of Canada. Over the last year, we have had about 800 people moving here per day. Half of those are international. And this, again, is for the entire state. Being that the state of Florida is in the Eastern time zone, that positions the state well to transact globally. There are new numbers that came out recently over the past year that there are now more new business startups in the state of Florida than the state of California.
Wow.
We're being known as a tech hub between Miami and Tampa, and really seeing startups pop up all across the state. You have advancements in air mobility, and Florida really being at the center of it. So I think I certainly have a lot of optimism when it comes to our local economy, and that's only a trickle down effect to our industry.
That's good information, because it's very hard to predict what the future holds, but all we have to do, we can look at what trend lines have been doing, and then see how people are reacting. But like you said, when the interest rates, I think, start to decline, we're going to see a pretty big uptick in the number of people that start to buy houses again in our area.
Absolutely. So just this morning, Mark, Jerome Powell spoke. We'll go back to interest rates here, and said that more interest rates are on the table, but that's to be determined. The plan is to get inflation down to 2%, below 2%. I think we're just a hair over 3 now. And so, being that inflation still remains high, Fed is prepared to make further hikes if needed. Interest rates now are inching closer to 8%. It's over a 20-year high. I was reading an article recently that 42% of homes don't have a mortgage. Of the remaining 58%, 90% of those have under a 6% interest rate. So that again is furthering that inventory problem, where people aren't selling because they have these lower rates.
Exactly.
As you know, Mark, these rates that we have now aren't unheard of. They're 17 or 18% back in the 80s. And I think I included a chart in the presentation here showing that historical look back of interest rates. So we can see at the peak there, that would have been probably sometime in the mid 80s, where they reached close to 20% and have inched down ever since. So when you look at where we're at today, historically, it is really low. Differences, cost of living has changed. We've seen major increase in home values, maybe have not seen that same increase in salaries, but relatively speaking, from a historical perspective, those rates are not exceptionally high. I think people are overcoming that by seeing that even in odd times like this, real estate is such a sound investment. When we see that properties are continuing to appreciate, there are so many different ways to overcome those high interest rates. We're talking a lot about 2-1 buy downs, where the seller is providing a concession that's buying down that rate temporarily. The most common, as I mentioned, is a 2-1, where you're buying the rate down 2 percentage points for the first year, 1 for the next, and then it goes up to that interest rate for the third year and beyond. Now, with that being said, we expect that rates will start to inch down first part of next year. So the hope would be that you refinance over the next few months here as rates start to creep down.
Well, it's funny you talked about the interest rates at 15 and 18%. When we bought our first house in 1980, we paid 15%. And of course, I was 20, and a 20-year-old doesn't think about rates. All they think about is, what is my payment? Can I afford this house? And it's like you're real nervous. It's like, oh my gosh, can I afford, whatever the payment amount was? But you fast forward, and then when you look at just the average over all the years, the rates really have averaged out between about 5 and 7%. So even though we're approaching 8% now, which we feel is high because we've just experienced, less than 3%, it stings a little bit. And for the typical consumer, for every increase of 1%, an increase in rates is a 10% decrease in buying power. So when it goes from 5 to 6, you've lost 10%, and then 6 to 7, you've lost another 10%. So it accumulates. And so therefore, what used to be maybe a $700,000 house is now, $500,000 house. So it makes a big difference in the buying power from the person that needs a mortgage. But as most of the viewers that follow this channel know, that probably about, I don't know, maybe 50 to 60% of the deals that I've done over the past few years have been cash. So this is a very cash rich market, but we still need the interest rates to be down for the people that need the mortgages.
And that's a great point, Mark. I think, again, the market that we're servicing, our home prices are going to be more stable, and in my opinion, going to continue to appreciate because we're not as subject to changes in interest rates because such a significant portion of our transactions here are cash.
Exactly. Exactly. Well, let's shift one more time and see about what are you thinking about the Airbnb situations, the short-term rentals? What are we seeing there?
Yeah, so this is always a fun topic for me, being that I own a few short-term rentals in New York State. But short-term rental market, we typically kind of refer to it as Airbnb, which is similar to a lot of the companies out there, VRBO. But we'll talk about Airbnb specifically. Founded in 2008, publicly traded company, has really disrupted the hotel industry over the years, but at the same time provided a lot of opportunity, in my opinion, to investors who weren't your typical real estate investor. You had people purchasing single family homes and renovating it, putting an emphasis on the cosmetic side. You had people who were offsetting their mortgage by renting a room out in their house or a level out. You had others who were purchasing a second home and renting it out for part of the year so they could enjoy it the other part. In 2021, new Airbnb hosts made almost $2 billion. The average, though, was a little bit lower than I expected, about $1,000 per month. Florida actually being the #1 market for extended Airbnb stays. And what's interesting is traditionally when you think of someone buying their first home, they're buying their primary residence. Well, there's been this trend recently of millennials who are buying their first house, which is a second home rather than a primary. And a lot of them are using that as an investment opportunity and renting out via short-term rental, whether it be Airbnb or VRBO. And so you've seen recently in the media about a supposed Airbnb bust. And so I wanted to talk a little bit about what that's all about. And I guess looking at some real data and numbers, you have seen revenue numbers drop over the last year. Airbnb properties. Phoenix is one of the markets that was hit the hardest. Airbnb numbers there are down 40 to 50%. You've seen some pockets in Florida and really all across the country that are down. And I think that some of that is that over the last couple of years, you had people jump on these opportunities for short-term rental a little bit too late and are now realizing that perhaps there's not the return that there was. And so the market did become a little bit saturated. Now, when I look at this potential issue, I think overall for our market and real estate sales, it could be a good thing if some of these properties come back on market, being that we have the inventory issue. But overall, I think Airbnb bust is certainly an exaggeration. While revenues are down, do I think the market is becoming somewhat saturated? Yes, depending on the market, but I don't think it's a bust by any means. I think that some people have the expectation that Airbnb properties will cash flow 10x, and that's just not the sense. Most markets have a seasonality component to it. So you think Florida this month, the month of August, is the lowest performing month of any in Airbnb. In New York, it would be the winter months, of course. And so the majority of markets out there have that. Just a real life example, one of my New York properties paid a profit of 4x in the month of July, 4x my expenses. And December, I'll be lucky to get one stay. So you average it out over the course of the whole year. In my case, still a sound investment, but not by looking at just 1 month.
Right.
And I think that this is the case with any investment. You have to do your due diligence. There are more and more municipalities that are putting restrictions on. They're charging a hotel tax or hotel fee. Some are requiring minimum stays. You might have to get a certificate of registration through the municipality. So always something to stay on top of. That's why I think it's really important to work with a knowledgeable agent like yourself, Mark, who is aware of the market and is able to point buyers in the right direction to get those questions answered.
Well, that's a really good point. I did a video on Anna Maria yesterday or day before yesterday, and one of the points that I was trying to make is that property values out there are up, but you have to be very careful as to what section that you're in. If you're in Anna Maria Island for the city, they have a 7-day minimum, but if you're in Holmes Beach, there's a large area that is a 30-day minimum, which keeps the the shorter the term, the rental, probably the higher the profit. The longer the term, the more stability in the market because you don't have as much changeover. So, but you have to pay very close attention to what section and where you are in the community so you know what the rental requirements are if you're buying it for an investment property, because your return on your investment is going to be heavily geared towards whether you can rent it by the week or whether it's by the month, because once you go to the month, as you know, then it becomes more of a snowbird. So they're going to rent it for probably December, January, February, and maybe March. And then, people aren't coming down for the summer and renting it for a month long at a time. So that has a big benefit to the short-term rentals versus the long-term rentals, but you need to know where it is that you're buying to make sure it's going to fit your requirements.
Yeah, absolutely. And if you are someone who's considering investing in short-term rentals, the first thing you do is call Mark. The second thing you should do is use a tool called AirDNA. It's airdna.co. Incredible valuation tool, gives you tons of different data points, estimates for revenue, number of days booked, estimates, return based on the purchase price. So it pulls comparable properties that are on Airbnb in your area. And it's really a great tool if you're looking at investing in short term. And Mark, I always, especially to younger generations who are just getting started, might not have the cash saved to purchase a property, reminding that there are so many other ways to invest in real estate. I think especially, again, for people just getting started, there's a company called Arrived that I've been following for some time, and it allows investors to purchase fractional ownership in homes across the country with a minimum of $100. So I started investing in that a couple years ago. So technically own fractional ownership in properties in California and the Carolinas and Arizona. They have long-term and short-term, and it enables the investor to benefit from the cash flow. So you're paid quarterly dividends, and also on the appreciation. Now, alternatively, you could be on the other side. So there's a property I own fractional ownership of in the state of Arizona, and every 6 months those properties are appraised. That actually went down in value. So my total investment went down. So, it's a gamble just like anything, but a neat way for people to get started in investing.
It sounds like it's almost a more direct way to invest rather than a REIT.
Exactly. Right.
For a real estate investment trust, or when you're going in and buying a stock that is only based around properties, it sounds to me like that might be another option to getting into real estate and still taking advantage of the increase in the market.
Right.
Well, Chip, I really do appreciate it. Do you have anything that you want to wrap this up with? Any words of wisdoms for the people watching?
I'll just sum up similar to what I mentioned in the beginning, that I think here locally, Sarasota, Manatee, we're positioned very well for continued growth. We have a strong economy. And I think that as we start to see rates decrease the first part of next year, hopefully, moving forward, we're going to see continued price growth and that healthy real estate market. So really appreciate you having me here, Mark. It's been fun to have this discussion, and I'm here if anyone has any questions. Reach out to Mark, and he's happy to get in touch with me.
Well, I want to thank Chip Murphy for joining us today here. It's been a wealth of information, and it's always good to have somebody else's perspective, somebody that's connected other than just in the real estate market, to be able to provide some valuable insight. And within Michael Saunders and Company, Chip has done a wonderful job for preparing not only the offices but all the agents for what seems to be coming down the pike. So we really appreciate his insight and his intuition. So I hope you got value out of this video. And if you did, I'm going to put a link down in the description below if you'd like to connect, if you're thinking of either buying or selling property here in the Manatee and Sarasota County areas. I'd be more than happy to help you out. Mark Boehmig, Michael Saunders and Company.